This is a crash and boom lesson today. I want to show you the power of engulfing candles when it comes to trading boom and crash and pretty much any other synthetic indices. So for us, we'll start in the 4-hour time frame. You see price was going up, going up all the way from this point up to here, and then you'll notice in all this move all the bearish candles are not engulfing, but when it comes to here, we have this a tiny one and then a bearish engulfing candle, and then that is when you start having price fly lower like that. So even if you take your trade at this point, when that engulfing candle closes like that, right here, then stop loss slightly above there, and you ride on this wave downwards. And also this crash 1000, you can see even in a buy situation you have this type of thing, right? So price was dropping massively like this, and then at this point you see we did not have an engulfing here, but price went up, and then at this point we have an engulfing candle, and this is a bullish engulfing candle, and then we have now price going lower, higher. So you can place your buys at that point, stop loss below here, and then you ride on this wave to the upside, right? And then you can have a look at another example. So this entire move was pushed by this engulfing candle to the downside, but when you have a tiny retracement like these ones, then you know that most likely we are reacting off an area of value, and then we drop further. For example, now at this point we were at a support, these are at a resistance zone, and then we have an engulfing candle and we place sells at this point, and you ride on this wave lower, right? So that is how you can actually participate using engulfing candles. Bullish engulfing candle, you buy higher, right? And then let us look at other examples. Bearish engulfing candle, you ride lower. Let me use arrows. From this point, ride lower, right? Bullish engulfing candles, from this point, you buy, go higher. Where else can we get one? Bearish engulfing candles, and then sell, right? Which other ones can we see around here? Can't see any other around here. Let's try and get where we can see others. Look at this, bullish engulfing, you buy at this point. So you may have wanted to check this as well. Bullish engulfing, you want to buy, and then your stop loss was hit, and that is normal. Once in a while you'll hit stop losses, and that is because there's no holy grail strategy that will give you profits over and over again. At least once or twice you'll hit stop losses. What will matter is how you are managing your funds or your risk management, so that even when you hit stop losses, at the end of the day your overall profit and loss or P&L is positive. Bearish engulfing, you ride lower all the way to this point. Bearish engulfing, you place your sells at this point and ride lower, right? Even this one was also good, you ride lower. Bullish engulfing, at this point buy, go higher. So this is the 4-hour time frame, and this can actually be used in any time frame you want to use. Can be the 4-hour, the 8-hour, the 24-hour time frame, or even the 1 hour and the 15-minute time frame, right? The 15-minute time frame. But with the 15-minute time frame now, I entirely apply a different perspective to it, because for the low time frames like the 15 minutes, the 5 minutes, especially for boom 1000 and crash 1000, you want to use 15-minute time frame to catch spikes. And because that is largely because spikes usually come in very huge forms as when after an engulfing candle, and that is because after that we will have multiple spikes that you want to catch. Now let us use an example, removing all these. How do I remove all these things? Remove all these marks. You can have bearish engulfing, you sell at this point, right? Bearish engulfing, you sell at this point, and ride on that lower, sell at this point, right? Bearish engulfing, these are tiny retracement, and then engulfing, you sell, engulfing, you sell, right? Engulfing, sell, engulfing candle, sell. You can see these things are happening, right? Engulfing candle bearish, you sell, engulfing candle bearish, sell, engulfing candle bearish, sell, right? Engulfing candle bearish, sell, and this one you might hit a stop loss, and that is because it is normal to hit stop losses once in a while, right? But if you took all the other bearish engulfing candles and you sell, and that was a good one, right? Here you sell, and it gave you extra several other opportunities to place more sell opportunities, right? So bearish engulfing, you sell, and that is how you can participate in this trading boom and crash. Now I am not saying you just place at any sell and buy. You can actually combine this with any other price action for technical analysis. For example, you can use support resistance. When you have a bearish engulfing or bullish engulfing coming off a support area or a resistance area, you want to place those sells. For example, this is a resistance, and then you have an engulfing candle at this point, you sell, and now you have to ride on all these waves, right? Any other you can use support. For example, you had a very strong support right here, and once we had any engulfing of this support, no engulfing here, no engulfing here, but here we have an engulfing candle, you want to buy after that engulfing candle closes, and you ride on this wave to the upside. So you can use that as well, using support and resistance. You can use indicators for synthetic indices, because they are purely based on price action. You can use technical indicators such as moving average, RSI, to determine where you place your buys and sells. But first of all, you want to have engulfing candles come out of that area first. I can maybe use an indicator, RSI, relative strength. Let me start with relative strength index. First of all, let me remove all these objects. So in the overbought region, you have an engulfing candle at this point, you want to sell, right? Now you are using indicators at this point. Here you have the RSI indicator in the oversold region, and then you have a bullish engulfing candle you want to buy, just like that, and you ride on this wave, right? Let us look at another example. Do we have any other example? Here you have here price getting into the overbought region and then giving you an engulfing candle, bearish engulfing candle, you sell at that point, right? Any other example? And this is just crash 1000. You can also apply this on boom 1000 as well. Now that is an example using RSI. Let us look at, maybe we can use even a moving average. Very simple simple moving average, very simple ideas that you can use and combine with engulfing candles to take trades. Let me try and get one. Where is this simple moving average? Moving average. Okay, let me just use this. So this is 9. Let me change it to 200 because you're in the 4-hour time frame. 200 moving average. Okay, now as long as price is below the moving average, the moment you have an engulfing candle, you sell. If it is above the moving average, the moment you have a bullish engulfing candle, you buy. with the moving average, it is helping you determine the overall direction of the market. So as long as the price is above the moving average, this 200 MA moving average, when you have an engulfing candle to a bullish engulfing candle, you buy. For example, you can use an example. Let us try and see an example. We have this one, right? This candle closes bullish, you buy, right? And any other that closes bullish, as long as you are above the moving average, you buy right there. Any other, you can see we had this as well, buy, right? So place a buy there, right? Bullish engulfing, this one, and the price is above the moving average, buy there. Which other area you can use this? You can see this, buy there, right? Let us try and see if we can get some sales. So price is below moving average. You can see price is below moving average. We can see and try and see if we can get something. There's no engulfing here, no engulfing here. Actually, this is an engulfing, so sell here, right? Any other? So that was a good opportunity. Let us try and see if we can get any other. Price below, coming back up and then giving us an engulfing to close below, and you sell just like that, right? So you can combine the engulfing candles with other price action or technical indicators or other technical analysis forms to determine where you place your buys and sells, and that is how actually you're going to trade boom and crash. Am I saying it is the 100% effective? No, sometimes you lose, you'll hit stop losses. That is why you still need to apply risk management, right? So that you don't end up blowing your account. But with this, you still should be able to make decent amount of money trading boom and crash. And with the boom and crash, I don't advise you to use this model in the 1 minute time frame. It is not advisable. For boom 1000, crash 1000, start from the 15-minute time frame going up. Boom 500, crash 500, you can consider using the 5-minute time frame going up, and even crash 300 and boom 300. So that is an example using crash 1000. Maybe I'll do another one for boom, and then we'll talk about it and show you more examples. Up to this point, until next time, bye.